Fox Business Alert after a quarter-point rate hike on top of September's 50 basis point cut. Let's get the CEO perspective of working in this rate-cutting cycle that has pretty much begun. We're not sure if it'll continue because Rene Haas of ARM Holdings, it's interesting to see that Powell is continuously saying, gotta wait and see on the data. But thank you for joining us. First, I need your reaction as a CEO to what helps you, what hurts you, if anything, when we are in this rate cutting cycle. I mean, money is cheaper to borrow as this number comes down.
Yeah, thanks, Liz, and thanks for having me today. When we think about the rate cuts for ARM, directly, not so much, because we're primarily a headcount business. We're all about R&D and engineers. We don't have a lot of capital expenditures. But when our customers think about spending money around CapEx or new investments, I think having lower rate cuts is certainly better than the alternative. Although quite candidly for our business, when we were going through the rate hikes, we didn't see much of a negative impact. But I'm hopeful that the news will end up that gives companies more confidence to spend.
Are you spending? Can you talk about how much you have been putting out and what you anticipate will be your spend? I mean, we saw every company that is related in some way, shape, or form to AI. I mean, Google jumps out, Amazon jumps out, $9 billion, billions and billions expected to be spent quarter by quarter. Is that the same for you guys?
We're not spending a lot of money on data centers and capital, just not the nature of our business. But we are hiring is a lot of people to fulfill that demand. I took over as CEO about 2.5 years ago. We were about 5,500 employees approximately. We're now north of about 8,000, maybe a little bit more than that. And the vast majority of those employees, maybe all of them, are engineers. And these are engineers to work on the kind of chips that go into data centers, automobiles, mobile phones, PCs, wearables, just about everything you can think of. So we've been investing heavily to capture that demand, but it's mostly been around just hiring talent.
You just beat on your top and bottom line for the quarterly results. I think maybe your outlook disappointed a bit, but it doesn't look like investors are disappointed. They're punching the stock higher. You've had a remarkable 2024 and year over year, looking very strong. What makes you nervous, if anything? I mean, as a CEO, you got to always be anticipating what's out on the horizon and be ready for it. Is there anything you see there?
Gosh, we worry about things all the time. For our company at ARM, we're in a very, very good place relative to the markets we serve. There's a lot of demand. If I go back to what keeps me up at night in terms of worries, it's probably around the engineers. Can we get enough talent to do what we need to do? The amount of opportunity that we have in front of us right now, Liz, is probably larger than I've ever seen since I've been at ARM almost over 11 years. And it's really to capture all of this opportunity that AI is driving across every single endpoint. Those endpoints need new products, more performant products, higher performance devices. That means more engineers, accelerates our product development cycle. So that's probably the single largest thing that I worry about.
That means that there may be a shortage of employees, and you got to probably raise the pay. I mean, what does that mean for wages to attract them from other companies? I mean, we hear this from a lot of the CEOs in your world, and they need those engineers just as much as you do.
It's a very competitive market out there to get the top talent. So we try not to be skimpy when it comes to getting the greatest engineers in the world. But you're right. When there is a supply problem, demand is high. It drives wages. Although for us, I would say it's a pain point, but it's not a new pain point that we're seeing. We've seen this now for the past number of years. To get really talented engineers, particularly in the AI space, you've got to pay top dollar for them.
Donald Trump, as you know, won the election for president. He takes over in January of next year. I really am interested to know, because he has been previously critical of the Chips and Science Act. What kind of move or change do you foresee at all? I mean, do you think that he would maybe end it in some way, shape, or form, or cut it back?
Yeah, the short answer is I don't know. There's a lot of speculation out there. I think the CHIPS Act in general has been good for the America's industry. I think it's good for the world. You and I have chatted about this, several times. One of the things that we need in this industry is supply chain resiliency, and we need data centers and fabs in different parts of the world, and fabs, which are so critical in terms of what we need to get done in our industry, having all the fabs centered in one part of the world isn't great.
Terrible.
So I think the CHIPS Act is very good for that standpoint.
We saw a disaster during the supply chain crisis after the COVID pandemic, and we knew exactly what happened there. So you agree that it is a smart thing to have moved that production, or at least started the process to have the government help move it here to the United States?
I think geographic diversity in a supply chain is paramount. And I think we saw that during the pandemic. And what we also saw during the pandemic is that semiconductors are just crucial for everything that we do. Your automobile, your appliances at home, obviously your phone, your PC, they all run on chips. And if they're all coming from one single part of the geographic world, it's not great. So yes, I'm in favor of the CHIPS Act.
Rene, great to see you. Thank you very much.